Hi there, this is the story of Alibaba. Ticker symbol BABA, B-A-B-A. Right now the market cap is 400 billion and the price $172 per share. Finally, Alibaba has started to rebound. And the most important question is whether Alibaba is still a great investment at the current price, at the current valuation. And the answer, you will find it in this box. During this video, open the box and you'll find the answer here. Now, maybe you watch my past videos about Alibaba. If you're not, you can search on my YouTube channel and you'll see that every time I made a video, I said that Alibaba was undervalued. And now, how should you invest? Because the price has increased quite a lot. Now, to understand my view of this company, you also have to look at their business, understand how they operate, what's the next steps, and then you are able to understand the valuation. So revenue over the last 3.5 years, as you can see, has increased quite nice, from 126 billion to 130, 137, and for the first quarter, fiscal year 2026, they report you 1 year ahead, an increase of only 2%, right? And their earnings, also nice increase. You can see 10 billion, 11 billion, 17 billion, and 6 billion for the first quarter of 2026, an increase over 78%. You can also look at their free cash flow, 24 billion, 20 billion a decline, and then 10 billion 2025. Now, about their earnings and free cash flow, you have to be very careful because, yes, you see them lower, especially for free cash flow, but they invest in their business. And when you value Alibaba, you have to be very careful because their numbers sometimes are misleading. When you see a decline in their free cash flow, they can be good for the long term, bad for the short term. That's why you have to be very careful how you look at this company. Now, if you look at their segments, their businesses, just for the last quarter, you can see China e-commerce, an increase of 10% year over year. This is important because in the past, their growth rate here was flat. And this is an improvement. Another driver that helped to push the price even higher. Of course, their earnings have declined here, EBITDA, what they report, by 21%. And here again, you see this decline in their earnings, but you have to understand their business. They have this decline because they started a new business, e-commerce in China. And they invested a lot here. In the long term, their earnings will get higher. You have to be very careful how you understand this business. Then, you have international e-commerce. Here, the growth rate has been quite high over the last, 2 years, 3 years, something like that. It was over 20% and now 19%. Still high growth rate. And they're almost profitable. They reported only a loss of $8 million, 98%, up 98%. Then the biggest driver for Alibaba right now is their cloud division. Growth rate over 26% and profitable, 400 million, 26% increase in their profits and revenue. Amazing. And of course, the other segments, some stores, some pharmacy, games, 8 billion revenue, a decline of 28%, and also their profits have declined by 31%. Well, you have to understand that their main businesses are e-commerce, China, cloud, and international. Those are the most important drivers for Alibaba. Now, you also have to look at the other things that can push the price even higher. Here, they still have 19.3 billion for buybacks. Be aware of this, that they can reward shareholders. They might buy at these high prices, or they might pay a dividend from this amount, or they will invest back into their business. The manager said that they will keep an eye on the price. They don't want to overpay. Another important thing is, don't forget about Ant Group. They have a stake, Alibaba has a stake, you as a shareholder have a stake in Alibaba Group. In Ant Group, 33%. And the current value of this company, Ant Group, financial company, 100 billion. This means 33 billion for it. But don't forget, in 2020, they wanted to go public, Ant Group, as an IPO. And back then the value was about 300 billion, over 300 billion. And of course, if that happened, when a company goes public, the valuation can get even higher than 300 billion, 450 or 500 billion. So this is another potential future driver for Alibaba. Ant Group goes public, this value will increase easily 3 times or even more than that. Be aware of this. So let's say 300 billion. That means close to 100 billion in value only from Ant Group. And on top of that, you also add their cash position, 58 billion, plus investments, 85 billion. Of course, here they include also Ant Group, so you have to subtract, but they also have other investments. At least 150 billion cash plus investments, 150 billion. And current market cap 400 billion. And don't forget, more than 20 billion in free cash flow. And when you look at these numbers, you see the difference. Alibaba, especially its potential. Now, this is one side of their future potential. One side. Investments, cash, assets, free cash flow, what they generate. But here, cloud, this is another side, another important driver. You see here, right? 26% in revenue and also profits. But don't forget that they announced to invest about 50 billion over the next 3 years in this business, cloud. And the management said that every time they invest here, their return, especially on AI, is quite high, over 100%. And imagine, if they invest 50 billion and you have an increase like this, a return like this, over 26% or maybe 40%, that means your investment here, the investment 50 billion, can easily triple, 3x, 150 billion. The next 3 years and a half, or even more than that. Yes, in the short term, the free cash flow will go down, but this money will go here. And that money, your return on that money can be 3x. So imagine having a 3x for this investment, 150 billion. And of course, you also have to see the revenue and the earnings. They also have tailwinds from the government, Chinese Communist Party, because they want to become an AI economy by 2040 or 35, something like that. And this is quite great. And that's why the price went up so much. Now, to open the box and show you the answer whether Alibaba is a great investment or a good investment right now, here it depends. It depends on the return you want. Do you want 26%? Do you want 33%? Or you are pleased with average, what the market can deliver, 10% annual return per year. So current valuation, yes, you can get a good return. Alibaba can be a good investment. And my answer is yes. Right? Is yes. But another important thing you have to be aware, and you have to ask yourself, is when to sell Alibaba. Never. What happens if the price goes to, I don't know, go to $150 or maybe more than 170 billion? When will you sell this company? And what return to expect in the future? Well, the answers to these questions are available for members, Titan members. Go to my profile, please join, and there you have access to my portfolio. And there, every time I make a transaction, I will make a new video for you. And by the way, my annualized return over the last 4 years has been over 40%. And by joining this level, you also get access to an investing course, other in-depth analysis, plus access to the previous levels, Spartan and Gladiators. So, if you want high returns than 10% a year, the average, what the market returns, something even better, like this, 40% a year, then join my membership. See you there.